NIO partnership disclosed by Elon Musk. What has Elon Musk just disclosed about the NIO partnership? Chinese electric vehicle manufacturer NIO serves as a cautionary tale for Tesla shareholders. If Tesla's volume growth follows the same pattern as its Chinese competitor, the company could experience the same fate as its shares. Hello everyone, and welcome back to Stock Market News, where we bring you the most recent news about the NIO partnership disclosed by Elon Musk. And before we begin, make sure you subscribe to our channel and click the bell icon so you don't miss out on any of our amazing videos. And let's begin! After going up by 25% in June, NIO's U.S.-listed shares have gone down a bit in July. The company's management first denied a short seller's claim that the company's income from selling batteries was overstated. The company then said on July 11th that it would set up a separate group to look into the claims. Because of the drop, NIO stock has returned to the 10-week moving average. After falling for most of the year because of fears of delisting in the U.S. and COVID lockdowns in China, the once-hot EV stock is now trading far below its 200-day average and more than 57% below its 52-week high. Still, NIO's competitors XPeng and Li Auto had the same problems, but their stocks have done better than NIO's. It's hard to put all the poor performance on NIO's management. When giving quarterly or full-year sales numbers to Wall Street, the company has never been below or above expectations. And NIO keeps putting out new models for Chinese people who want to buy EVs. The ES7 SUV is the newest model from NIO. Unit growth is the problem with the stock. Since almost a year ago, NIO's been stuck in a range of about 10,000 monthly deliveries. That is unacceptable to growth investors. Wedbush analyst Dan Ives tells Barron that NIO is a warning for Tesla and the whole electric vehicle industry. It all comes down to the size and scope of production, which became NIO's albatross last year. The multiple went down because growth slowed down a lot. Although Ives does not cover NIO stock, he has a buy rating on shares of Tesla and is a bull on the company. He wants each share to be worth $1,000. At the beginning of 2021, not long after NIO hosted an event for customers and investors, the company's shares traded for around 18 times the estimated sales for 2021. At that time, Tesla shares were going for around 16 times their expected annual sales. In a bear market, all multiples go down, but NIO stock now trades for about 4 times the estimated sales for 2022, which is a big discount compared to Tesla shares, which trade for 8 times the estimated sales. Tesla's multiple has held up better than NIO's because Tesla's been able to keep growing its sales faster than NIO. Tesla's opened new factories and expanded old ones to keep the number of cars it ships from going up quarter to quarter and from year to year. About the same time last year to the first quarter of 2022, Tesla delivered about 68% more cars. About 28% more goods were sent out by NIO. NIO stock slides due to Tesla's good earnings. Given all the good news this week, NIO investors may be a little disappointed by the drop on Friday. After Tesla's surprising earnings win on Wednesday, all tech stocks went up. The earnings per share for Elon Musk's idea beat what was expected. In fact, Tesla reported adjusted earnings per share of $2.27, which was higher than the expected $1.81, and revenue of $16.93 billion, which was lower than the expected $17.1 billion. Musk also told investors that the company's demand has stayed strong and that it expects its supply chain problems to be solved quickly. The report made Wall Street and many electric vehicle companies like NIO feel better, and shares of NIO went up by more than 2%, and the tech-focused NASDAQ also went up. Unfortunately, today's unexpected drop in prices wiped out most of the gains made this week. It remains to be seen if NIO can get back to where it was before releasing its exciting new battery. In addition, it's uncertain how long NIO's BaaS service will continue to disrupt the traditional electric charging market. The technology for charging is advancing. As the charging network becomes more widely available, it may render the company's battery exchange service obsolete. A more significant issue is global semiconductor scarcity, which is delaying the production of electric vehicles. The chip shortfall is expected to endure until 2022, thus investors are justified in anticipating that NIO would post poor shipment numbers over the next few months. Wall Street thinks Tesla will sell about 1.4 million cars in 2022, which is more than the 936,000 cars it sold in 2021. In 2023 and 24, about 2.1 million and 2.6 million cars are expected to be delivered respectively. It seems anticipated that Tesla will be able to build approximately 2.5 million automobiles by 2024 with its current production footprint, which includes operations in the states of California, Texas, and the nation of Germany, in addition to China. Also, it took Tesla about 2 years from the time they broke ground on a plant to the time cars started coming off the assembly line. By this time in the next year, investors should presumably be considering either the construction of a new facility or a considerable extension within the confines of the existing footprint. If one isn't coming soon, Tesla stock could have the same problem as NIO. Just as clear as what NIO investors should do: get growth growing again. By 2022, NIO has been increasing its capacity. It wants to be able to make between 40,000 and 50,000 units each quarter by the second half of 2022. Problems with the supply chain could be hiding that possibility. Investors need to feel some sense of comfort if NIO management is able to pull through it and get unit deliveries back on the run. All three major indexes still had good days because big tech stocks did well. During the course of the session, the Dow Jones Index increased by 47 basis points, the S&P 500 Index increased by 0.59%, and the Nasdaq increased by 1.58%. Wednesday's big news in the electric car industry was Tesla's second quarter earnings report, which came out after the market closed. The leader in the EV industry had impressive revenue growth of 42% from the previous year, but this was still less than what Wall Street was expecting. Although earnings per share came in at $2.27, which was higher than the consensus forecast of $1.81 per share on Wall Street, automotive margins decreased considerably, demonstrating that the company has been severely impacted by increased production costs. About 75% of the Bitcoins Tesla owned were sold and turned into regular cash. At first, Tesla stock went up, but as of the time of this video, the stock was down by about 1%. BYD, NIO's domestic competitor and the leader in the Chinese EV industry, keeps moving forward, even though there are rumors that Warren Buffett sold his stake in the company. As it builds new factories around the country, BYD wants to increase the number of cars it makes each month to 300,000. It would be a huge change since BYD only made 600,000 cars total in 2021. NIO has not yet said that it will be selling new shares, but the Chinese company that makes electric vehicles has had a lot of trouble in the past few weeks. The thing that seems to worry people the most is a short report by Grizzly Research. Grizzly says that NIO sales and net income margins have been inflated by Wuhan Weaning. Weaning was started in 2020 and is in charge of managing NIO's battery assets. Grizzly thinks that Weaning is misreporting revenue, which is causing its battery sales to be overstated. The short seller says that NIO's battery as a service lasts an average of 7 years. But Weaning does not count the income over the cost of the subscription. Instead, he counts it all at once. Because of this, Grizzly thinks that NIO has inflated its revenue by 10% and its net income by 95%. Over the course of the 9 months, ending in September 2021. NIO said in response that the report has no value and is full of mistakes. And that'll bring us to the end of today's video, friends. Please feel free to let us know what you think about it in the comment space below. And if you like this video, make sure you leave a like and subscribe to our channel for more great videos just like it. And make sure you press that bell icon on your way out the door too. That way you are always notified of our latest updates and uploads to our channel. We are always putting great material up, and we always look forward to hearing from you again. Thanks again for spending time out of your busy day to hang out with us in today's video, and we'll catch up with you at our next one. Have a great rest of your day, and thanks for watching.